So this is a quick video going over the results for this week, trades and so on. So week started, didn't trade Monday after Brexit. Started on Tuesday 28th, went long Australian dollar, Japanese yen, used multiple time frames, made 50 points there. Again, went on, used the asset class of the Aussie dollar, Japanese yen, went long, lost that trade. I used a 25 point stop as standard. I went on along on the UK 100. I stopped out for 0.2. That was because I looked on the higher time frame and I thought, well, there's an extended move to the upside, so I kind of thought, well, maybe it's a bit overextended, so market will reverse. I then did something you should never do, really. I went in there at a worse price after it's moved about 20 points in direction I thought it would. That reversed, got a 15 point loss there. I then went back in again. The market wasn't really moving. I decided to close a position. This was a short. I went in again on the long and lost there again on the old FTSE. So it's definitely, I'm going to have to have a look at the strategies I use for the UK 100. On the Aussie dollar, Japanese yen, went in there with a long position. Again, went in my favour, went quite a bit in my favour, was pretty close to my target, 50 points. Started moving away from it. I didn't like the chart pattern, so manually closed the position. The trade would have failed because it then went back past break even, so it was the right decision to close the position. I then went in with a short similar to my entry for the long, and the market seemed to have stalled somewhat and looked likely to reverse direction, so I closed that position. After seeing a bullish move in equities in general, I decided to take a long on the Nasdaq 100, and the NAS 100. That position I held pretty much almost. I was going to hold it overnight, but decided against it after watching what's happening post market. I decided to manually close the position for 36.88 points. I then went on the short on the Aussie dollar, Japanese yen. The market spiked up. I was stopped out for a 28 point loss. This was pretty late in the night. I then waited for the start of the Asia session to see where there's a dollar Japanese yen would go. It looked a more favourable entry to the previous one. It was made 56 points. That was my target, and again the market moved way beyond my target. I then took a position on the UK 100 for a short. I was successful in that position, so all was going well at this point. And then I took another short position on the UK 100 after closing this position, and I lost that one. The market moved against me, so I decided something you should never really do, to be honest, without much analysis. I took a long position. I lost that. Late in the evening, pretty near the close, I saw the FTSE pretty much going somewhat parabolic. I wasn't sure what was the reason for this, but I decided to pick it up, thinking the market was overbought. Something you should never do, really, especially if you don't know why the market's moving. I would later find out Mark Carney intimated to more stimulus due to the Brexit. The market seeing this as bullish and bullish for equities, so the market was spiking up parabolically. I thought on these two trades here for 25 points that the market was at top. The market extended far beyond my entries. I did lose those positions again. I then went back in again for another short, but I believe to be after the market moved down somewhat, quite a bit from where these positions were stopped out. Again, the market spiked up. This is post-market at this time. And then, this, you could say, these trades here were revenge trades. These were emotional trades. Something you should never really do, to be honest. So I then opened a long position based on movement of the UK 100. That position started to go against me, and due to fear, closed the position. I also closed the NAS 100 position at the same time as this position, as I was somewhat annoyed. Some very emotional trade. Yeah, that's great, isn't it? I was somewhat annoyed by the previous trades, so I closed both positions, and that was it for the 30th. Now, how the 30th ended carried over to the 1st of July. Now, the end of the month is not a good time to trade. I've seen a few videos where a lot of people say that, and well, with experience, they're likely to be right. So the 1st of July, first trade was successful. It was successful in that it was a positive number, but I manually closed this position, even though it would have likely gone to my target 50-point target, but I manually closed it due to the fact that equities were strong based on Mark Carney's intimation of further liquidity being added to the UK financial system due to fallout from the Brexit. Now, because of that, bullish equities tend to be bad for the Japanese yen, so I decided to close that position before the open of the European session. I then reopened a position on the Aussie dollar Japanese yen at a much worse position than this, and I so happened to have opened a position at pretty much near 10 points from the actual bottom of the Aussie dollar Japanese yen. So it pretty much went down to the low, 10 points below my entry, and from there it rallied back quite spectacularly, really. I should have given more credence to the actual chart pattern, because the chart pattern was a pretty similar to, let's see if I can move it on the old charts. So and if I go to so this is the 30th, and yeah, so this is the 30th. So as you can see here, we've got a pin bar, pretty bullish chart pattern. So after seeing the price come all the way down here, one could argue after seeing this that the market likely to go up due to the strong buying that's pushed the prices up on a 15-minute chart. Could have been a fantastic entry. Where I took my short, this was July. Dollar. I took my short somewhere in this region here. After seeing this, I placed my stop 1 point above this candle here, 1 point above. Market came down. I look at the charts, seeing what looks like pretty much like a V-shaped reversal. I thought, well, maybe it's a brief rally before it continues to sell off downwards. But again, should have looked at this as possibly being a double bottom, even though there was what could have possibly been a double top there. This is also a bullish. If you look at this chart pattern here, it's bullish. But I thought, well, I'll try to stay into trade, so I moved my stop up to 30 points. I was, as you can see, I was stopped out. I should have just kept the stop. Can't manually close the position. Trust my judgment on the chart pattern was forming, the V-shaped reversal, also this double bottom here, and disregarded this double top here, because what I did was I moved myself from there to 7682, and as you've seen, price came up and broke that stop, so lost that trade there. I then went on GBP Australian dollar, and let's see if I can get in the chat. So I was in front of my charts when taking this trade, but what I did was, bear in mind I couldn't see the rest of that chart there, I saw that prices came down, saw these wicks here, saw these candles going upwards. I thought, well, maybe this might have been a bottom for the extended move to the downside for the pound against the Aussie dollar. Took a position and used a 30-point stop on this actual currency pair. Broker is offering he's charging a 6-point spread. So this trade lasted actually 5 minutes. So as you've seen, price came up and immediately smashed through my stop, and as you've seen, further extended to the downside. If I went down to the downside on the Aussie dollar, on this JBP, so the pound against dollar. But taking a long position in the context of this was not the best trade. Because if you were to say, look at the hourly, again, we've had, after this extended move to the downside, partly this candle here as a result of Bank of England coming out, proposing liquidity. So last week in the pound's come down, we've had some retracement, and it's further extending the move to the downside. Now taking a long position where I did, it's not the best move in the context of the higher time frame. So there's 30 points lost on the GBP AUD, and also lost 15 points UK 100. Again, that was a short position in light of Bank of England's proposal to add liquidity to the financial system. Pretty much should have had a long bias. Taking a long position on the NAS 100. Now, the thing is, the long position on the NAS 100 is, it was quite a while after the open, so pretty much 2-3 hours after the open. After looking at the charts did look bearish. The price was moving below the moving averages, which I use. I decided to keep a hold of the position, expected it to move back to the upper side based on the fact that we had a strong close of the FTSE. The market moved against me and against that stop, and pretty much hit this 12-point stop for the NAS 100, so that position was closed. Another position, again these are extensions of the previous day on the Thursday, another position was open on the UK 100, which was closed after seeing the Nasdaq move against my position. I then opened a short against the Nasdaq, which moved against me, moving to the upside. I then decided to close all three of these positions here because they were taken without any analysis, and in reality were probably symptomatic of emotional trading. So at the end of the week, the target was 100 points. At one point in the week I came within 25 points of that. By the end of the week, 66.82 down. Now definitely going back to the drawing board, having a look at strategies, and see what next week brings.